Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss the current state of the market, side hustles, and basic financial tips.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, June the 5th, and June is looking up. It's looking like we're going to have another green week. We're actually recording this right as the market opens on Friday. So as I say that, we just opened down about $4. So we'll see where we're at in about 45 minutes when we're done recording. And, see where it goes. But as you see it, and I think this is kind of an interesting way to see like how you live trade, you're seeing it open down around $3.50 SPY to be exact, around 413 from 417. How do you think it plays out throughout the rest of the day? Obviously, it's a Friday going into the weekend, but is this the spot to go long? Obviously, we're only 3 minutes in, so if you were going to be making trades right now instead of recording, like how would you play this?
Yeah, so the way that I would have done it, or the way that I did do it, every day I kind of put out like, not that I put it out, but I kind of set myself like a little bit of a watch list. And so I'll read directly what I said for this watch list. I said, morning, market giving up about half of yesterday's gains. They tried to fill the gap up at about 8:30 on the jobs report, and it failed, and now it's heading lower. If we open here, which is 413, I'd consider that a pretty big sell signal. However, we'll need confirmation of this because some other markets that I look at some other markets that I look at as indicators were relatively green, and they had relative strength. So, and not that means much. However, I would like to, I would have liked to seen them kind of confirm this move down. And then yesterday I had said that that 407 level, which was the previous day, so Wednesday's low, was my support. So I wanted to see it break below there, and then I wanted to see it come back up, and then I would look for a short. I just, and so I had said, think of this new 412 as our 407 from yesterday. I'm optimistic that I'll get a trade today. And so you see right off open, SPY hits 412.07 and just fucking off a bean off of there, goes all the way, hits 414 within like 3 minutes. So, pretty much for me is that I need either under 412 to then look for a reject and a new sell signal, or I'll need like over 418 to look to go long kind of thing. But like I said, is that I'm pretty optimistic that I'll get a trade today in either direction. But my bias says below that 412.
Yeah, no, it got really close to a rise. It opened around 412.25. It's looking like you may actually see it sooner than later. Now we're at 412.6. So I guess you can keep your eye on that throughout the podcast recording.
Yeah, my
But
next level. I mean, while we're doing this live, I might as well just say it. My next level downside is 410.25 and then 408, and then my upside is that 413.50 is kind of like where I put like my break even, like where I start the day. So even though the market's down 1%, that's kind of like my midpoint for me. And then I said 418.25. 420.20, and then I'd really be shocked to see the market go higher than 423. Really.
yeah, but at least, hey, it's looking like we're about to have the second green week in the books for quite a while. In quite a while.
Yeah.
But all right. Well, do you want to go over any more market stock stuff? Obviously, we have the Amazon stock split. What is it? The 7th. So, is it Monday or Tuesday? It's happening on.
Yeah.
Let's double check.
So the date for the shareholders was last week, and then it's next
Yeah.
Tuesday. And so
I think a lot of people got confused, expecting it to run up on like the shareholder date, but
Yeah.
it seems like the past couple times the run up always happens after the split when the shares become cheaper.
Yeah. Well, I mean, the whole point of a share split is to make it cheaper.
Yeah.
So it's.
Do you
kinda like
think less share splits will start happening as we see more of a shift into partial shares? Obviously, you see them on Cash App, and then Robinhood started it. Or do you think partial shares was kind of just a fad? You're not seeing it as much anymore.
Well, two things. One, market just bounced off that 412 level again. So maybe I won't get that trade. And second thing is so two things. So splits really allow company, and we can go down this rabbit hole. I think we've talked about it a few times.
But I mean, as like the biggest company in the world right now is going through one, I think revisiting splits as a whole wouldn't be a bad idea before we move on.
Yeah. So one of the biggest things is that what these splits allow companies to do is that they allow them to do buybacks. And so if you really want to go down it, like there's a few fund managers who have kind of gone down this rabbit hole before, and who have gone down this rabbit hole before, and kind of like shown like. I don't want to say it's like a conspiracy theory, but they've kind of shown like the creative accounting that companies do, or the creative ways that companies the creative ways that companies keep their stock prices up. And Apple's been notorious for this with the buybacks and the splits. And so basically what some of these fund managers say is how they keep it up is that they basically do a split, and then they do a buyback, and that buyback, it comes down to simple supply and demand, and they basically keep the stock price up, and then when the economy's good and the stock price is, and the company's doing really well, obviously the stock price goes higher. Then they do another split. Then shareholders who the new generation of shareholders buy it. And then again, they do another buyback when the economy goes into another terrible market cycle, or the bottom end of the market cycle, and things like that. And so that's one thing that we've seen. But the one thing that I will say that we haven't seen in the last, I'll say, like really since 2008 is that. And we talk about this a lot, is that money's really been pretty cheap for a pretty long time. And when money doesn't get cheap anymore, these companies won't be able to, or a lot of companies won't be able to do buybacks if they have to get any financing. And so that's the thing that I would be concerned about, is that, if we truly do go back to like when Nixon was president, interest rates, home interest rates were like 20%. Like that really wasn't that uncommon. And so if we go back to that time, then then I don't think companies will be able to do buybacks like they used to, because most of them won't be able to get the financing. So that's something to keep in mind. It'll be interesting to watch, I believe, over the next really like 2 to 3 years. But I think that all will be good.
All right. Well, going on into our next topic, which is side hustles, because hey, market's down. Gotta talk about side hustles. Had a few. I've had some pretty sketchy jobs as well. Before we get into obviously the door-to-door sales, but that was no side hustle. That was like a 12-hour a day job. But getting into some side hustles, obviously, you hear Mr. 4 to 8 or whatever the fuck his name is on Twitter talk about real estate all the damn time. But kind of going into some more realistic ones aside from just real estate. Not saying real estate's not realistic. But one where you don't have to necessarily get the license, do the same thing everyone else is doing. What do you mean by side hustles? I know you sent an article. What are you kind of looking for when you're talking about side hustles?
When I'm talking about side hustles, I think it's something that you're not necessarily looking to make it a career. You're not, yeah, no, you're not necessarily looking to make it your career or replace your full-time job, but it's something that can, maybe pay the rent on the side. I'll say like some of the dirty work, like some of the expenses that you can't really sometimes get away from, I'll say. And so especially like with inflation and other things, running rampant, gas prices, stuff like that. It can be, a few $100s on the side every month can be huge. And so that's where I think, like, when I think of side hustle, that's really what I think of.
All right. Well, hey, so I guess since you're going through the trade right now as you're doing it, we might as well, we don't exactly get too many live trades. Usually record, after the market closes. So do you kind of want to walk them through like a little live trade, how much you're putting in? You're seeing the market hit these supports. And also, while we're totally ignoring our main topic of side hustles, we can also kind of go into why those were your levels. Why were the what would the 412, like, why was it important? Was that what day of the week? Was that the low or was that the 10-day? What did you see that the 412 offered?
Hang on. I'm selling all of it for an 8% gain. Fuck this.
And that's trading with you.
All right, fuck. This thing will go lower, but I don't care. Podcast. Gotta focus on the podcast. I took the 8%. Fuck it. All right, let's see. All right, so basically, I'll walk us through the trade while we were doing this. So I had said, as we just talked about earlier, I had talked about that 412 level kind of being like my big support level. So I had seen that level come back up to 414 at 9:30. They had tried to, bring the trend, not bring the trend, but they had tried to fill that gap back up. They weren't able to fill the gap back up. It comes back down at 412 level. They bounce it. They bring it back up, and it had a pretty big stuff on pretty big volume right at that 413.20. That's a pretty big sign for me that gives pretty good risk to reward. I can put my stop just over 414 and take that trade down. See how it reacts at 412. If it bounces off that 412 again, I can sell half for a small profit. Or if it flushes through, which it did. If you guys look at the 1 minute candle at 9:44, it just flushed right through that area. So now it flushes through support. Now I bring my stop loss back up to that 412 area. So worst case scenario, I'm going to take a 4% gain. Now, I ended up taking the 8% or 9% gain. I had taken June like 9th puts or whatever. I had just taken the 8 or 9% gain. It was like a 4-minute trade, 9%. I'm doing the podcast. It's Friday. There's no reason for me to get myself into trouble. However, if I was still inside the trade, I probably would have sold a third at that 9% and then just moved my stop up. Again, it's Friday. The market's already down 1.3%. And at one point, these puts 2 minutes ago were up 17%. So I probably would have sold more there. However, like I said, Friday, lunch money. I'm really just made like, like $2,000 or something. Like I don't need anything crazy, and it was a 3-man trade. Like we annualize on like an hourly basis. It's like I'm making
and
like
you did that.
money.
You did that on the job too.
Yeah, on the job, Don't tell our bosses.
Yeah, if iHeart hears this, they'll be fucking pissed.
Yeah. So that's pretty much the way that I would. So now I probably would have been pretty much stopped out. So again, it would have been a third that I would have sold at the 8%, a third at the 17%. Typically, I like to be more than out by by the time that it gets up near 20%, especially because I was holding like next week puts. So like a 20% move on next week puts with that kind of delt is a decent move. So now, if I was out half right now, the time is 9:49 a.m. 55 seconds, and we're sitting right at that 412 support. So now I would see how we react at that 412 level. Now, if we get like a pretty big green candle, then I'd be out. But if we fail to reclaim this 412 support, then I'd have conviction inside the trade to continue to hold lower. So again, is that the way that I pretty much trade is that I want the trades to work, and I want them to work now, and I want them to work fast. If they don't work, my average trade time is about 17 minutes. If it gets longer than that, then I'm typically moving on if it's not going to work, or if it's not really happening inside that time frame. So right now, as we're talking about this at 9:50:41, it is failing that 412 level. However, it really all it takes is one big green candlestick to really stop me out. So again, is that right around here, I'd still be holding, half of what I'm holding, I'd lock the gains on the other, and I'd probably set a stop right at 412, like 43 or something. And so because again, I got a little bit of breathing room because I would have sold, basically like 30% of my position. And, it's Friday. So worst case scenario at this point is that a little locked, probably again, like 5% gains or something. And again, is that the market's not like failing super hard right here. So I would just be watching the price action to see what happens. I'd probably take off like another 10% right here because again, I want the trade to work immediately. So now I'd be out like 70% and just holding the rest just to see if we get that move closer down to like 410. And that's pretty much how I play these things. And so now the market's failing, that's pretty much how I play them. So like I said, my average trade time is about 17 minutes. I really only try and take 1 to 2 trades per day maximum, if that. And, it works for me. So like, it works for me.
All right. Well, going back, did you want to do the finance tips?
I understand that the headline that we're about to read is quote unquote just for women. Like it says, finance tips for women. However, I really like the tips. I felt like there's stuff that we talk about a lot. And so I felt like it was important for everybody to, kind of, I thought that it would be bad
really
for
important
everyone.
for the 6 girls listening.
Yeah. And I've never heard of the Every Girl website or magazine. But like I said, is that, we're all for girl power and stuff. So, and so I thought that this was pretty good, and I wanted to shout them out. I wanted to see exactly what was going on, and like I said, I like this. Now, just like a little update on the trade, it's coming close to where my stop technically would be, and that's trading with you. So unless we fail, just consider that it pretty much hit my stop because it's within 10 cents. So unless we get like 410, then that's trading with you, and I would have been stopped out. So there you go. Would have been like a 5% gainer. But lunch money Fridays is what I like to call them. Stress-free trading. Like that was relatively, for you guys listening, like I felt like that was relatively stress-free, or you guys could, maybe it sounded a little chaotic, but I felt like it was relatively stress-free, at least for myself, trading it. I was talking about personal finance while doing it. So
It didn't
you know,
sound very stress-free.
I think that's just my voice, honestly. It's also because like I'm the type of person where like if when we're doing the podcast, like I have to turn off everything else. It's the same thing with like trading. Like I have, because my mind just doesn't do that. Like we just don't. I don't. The Henny clan just doesn't compartmentalize like that. That's why I think I did so bad at school. Yeah, just not the way she blows.
I think
Yeah.
in school you focus on mainly just one thing, though. That's like what you're supposed to do. So you should have thrived.
Yeah, I guess.
In
Yeah.
theory.
Yeah.
All right. Well, let's hear our finance tips for women, man.
Okay. All right. So, like I said, this article was done by the Every Girl, and it says 10 pieces of financial advice every woman needs in their 20s to hear. And so, Dano and I are inside our 20s.
Not women.
And what?
Not women, though.
Not women. However, I really thought that this was good. And so, I really like the first sentence, because the one thing I will say that, like, I know, like, my mom and, like, my sister, like, they're real enthusiastic people. Like, it could be, like, I just lost, like, tons of money, and they'd be like, this is empowering, Mitch. And I'd be like, huh, all right. So I really like
we have different definitions of empowering, Mom.
Yeah. So I even just read, like, the first little part here, and I really liked it. So the first sentence is, it's empowering to own who you are, go after your dreams, and make your own money. I love that. That's like everything I stand for. And once you're in your 20s, financial freedom and independence are more tangible than ever. Being financially independent doesn't just mean making your own money though. In fact, there are so many elements that go into it. And if you're in your 20s, now's the time to learn exactly what they are. Keep on reading to learn the 10 pieces. I love that. I thought that was fantastic. So
I decided to read the other 9.
Yes, I did. And so number 1 was start planning for the future. Now, this kind of goes into, like, taking the time to build an investment portfolio and retirement fund is crucial. However, the one thing that I've learned about, I'll say 80 to 90% of everybody, is that they hate talking about their finances, and especially the future of their finances. So with that being said, I will say that I don't necessarily agree with, like, the whole, like, you need to have a 50-step plan. I just think it's one of those where start a Vanguard, what is it called? Time ETF, and do it that way, because anything more than that, and honestly,
How far
I feel like
we putting these time DTF.
What? So for me, I think mine's 2055 or 2060, something like that. But the biggest thing is that just let them do the work. Like it's like your 0.1%. Let me see. I think you pay a commission of 0.1% on the time DTFs. So just let them do it for us. Like we don't. What do we need to do? Like, just let them do it for us. And what the way that that retirement ETFs work. Why can't I think of the actual word? Come on, we talk about them all the time.
Not.
Target retirement funds. Target date funds. Sorry.
You say retirement. You say ETFs a lot more than that. But
but my point to all this is that the target date fund is really great, and so I wouldn't necessarily feel like you need to plan out your life to the maximum, especially as far as retirement age goes. Like, you could want a beach house this year and then not want a beach house next year. And
and you'll definitely won't want a beach house in 2055.
Yeah. And so I feel like a lot of things can change. So in my personal opinion, the way that I would do it is that I would just max out as many retirement accounts as you can. And I honestly feel like you'll be okay with that. So I don't, because again, I think that a majority of everybody, especially Americans, just get so overwhelmed thinking about their financial future. And we don't want that. I don't want that. So that's probably the way that I would do that. Now, number 2 is build an emergency fund. Y'all know I'm a huge fan of this for so many reasons, but I'm a huge fan of this, especially inside, if you're a trader and inside our line of work. I am a huge fan of this and actually think like it's more of like a necessity than anything because hang on, sorry. Just closing out a swing.
I did. Hey, keep up the trades.
Yeah. Thanks, brother.
Never stop.
So I think an emergency fund is necessary for everybody, but especially for traders. Like us as traders, typically they say like 6 to 12 months. I think that you should be able to have like 2 years inside your trading. I mean, inside an emergency fund. Just in case, because again, you never know. I mean, you could have a bad month that wipes out a year's worth of gains, and especially I think we're all starting to see this now, is that you can have a bad month, it wipe out a year's worth of gains, but even more so, what it does to your self-confidence is even worse. I mean, your self-confidence gets absolutely depleted. So if you were making like, let's just call it like $1,000 a day, you could have to go down to making $300 a day for, a year just to get your self-confidence back on top of the money.
And then not even come close to whatever your money is supposed to be at.
Exactly. And so that's why with traders, especially, I think like an emergency fund, it's got to be like emergency fund on steroids. And trust me, I used to be of the same mentality of like, fucking emergency fund. I'm going to keep everything that I have inside my trading account. And like one day I like freaked out. I was having
if you have a lose 15% of your account day and then you're like accounting taxes and you're like, fuck dude. And then car payment and then I have to pay rent until the lease is up and you're like, and then I'm only going to have X amount left. You're like, fuck.
Exactly. And then I'm like looking at I'm looking at my bank account and I got like $2,000 in there. And I'm like, oh, this is not good. Like that's not even my rent payment. So I think that I think that that's really important for traders, but for everybody else as well. An emergency fund is a must. Like we talked about, 6 to 12 months. But honestly, like I think if you're single or like just married, 6 months is fine, especially if you're on like the lower end of the income toll or the income pole. I think that all your money should be going to maxing out retirement accounts and maybe saving for a house and stuff like that. And then add in the emergency fund, have 6 to 8 months. If you have kids, that's different because your expenses are so much higher. And, you also have, kids. So, that's another thing where, I think that it's probably really important to have a pretty significant emergency fund. So that was number 2. Number 3 was actively work toward paying off debt. Now, I like this one, but it depends. Now, when I think of actively working to pay off debt, to me personally, there's 2 kinds of debt. Good debt and bad debt. Good debt, I look at as like an investment, rental property, hell, even your own personal mortgage. I'm not going to say car payment, but some people do view, like if you have like a 2% interest rate on your car payment and, and you got like a 2010 like RAV4 or something and you're paying like $100 a month and it's only racking like $300 a year in interest, something like that. Like that's, people say that that's good debt. I'm not going to throw that in there, but some people do. I think that's more of like a personal preference. And then you got bad debt. Now, when I was going to buy my father the Corvette in December, I kid you not, the lady leaving the manager's office before me had just signed to an Audi for an 18% loan. I had
to get that Audi.
Bro, you don't know how close I was to stopping this girl. Like,
yeah,
I
dude,
like I
they probably wouldn't have sold you the car. They'd be like, you just fucked us out of like $80,000.
Yeah, like, bro, like that was the thing, was that it was like a $30,000 car. She was gonna be. I was like doing the numbers in my head. I started sweating. I called up. What do you call it? My parents didn't know about the car, obviously, so I called up like one of my friends. And I was like, hey, listen, I am like, this girl is literally about to cripple herself, and I'm watching it go down. And they told me, just she's gonna have to make her own decisions. And so I actually did try and chase her out of the parking lot, but
I was
she's
like, no,
gone.
get that Toyota.
Yeah. No, I actually tried to, cause I had sat down, and the guy was like, yeah, like that girl. I was like, I really didn't know much. I was literally, so it's funny because the manager, he was a nice, friendly guy. He had said, oh yeah, like the lady, right before you had just sat down, because I was asking about my interest rate, which by the way, the bullshit about wanting me to, it's such bullshit that I got to put down, that if I want to pay cash for a car, I got to pay more. Like, it was cheaper to finance it for 6 months than to just pay cash. It was absolutely ridiculous. However, that's not the point of the story. The point of the story was I have like a 3% interest rate. I was like, can we do any better? And he was like, listen, the girl that just got up on that chair, just signed like 17 or 18% for like a $35,000 car. And I was like, what? And so, I didn't want to jump out of my seat and go be the crazy dude to run after her. But I will say that I was just finishing up, and I tried to find that girl. And then when I came back to pick up the car, there was a lady getting into an Audi, a few days later. And I went up to her and I was like, hey, like, not to be that guy, but like, can I ask what you paid for this? Because I knew how much she paid for the Audi, and if it was the same girl, I was not gonna let her drive off the lot with that. There was just no way. That is how you cripple yourself, in my opinion. You're
like the vegan standing in the fucking meat aisle, yelling at people.
Listen, I just couldn't believe that. Like I'm like, when you do the numbers. Oh, I can't. Honestly, it's making me sweat, really. Like, just thinking about signing an 18% interest rate, it's really just making me sweat. But so the whole point of this is that I consider that bad debt, and I also consider, credit card, worst debt you can have, in my opinion. And then, student loans are what they are. In my opinion, student loans are
not debt, dude. Biden's fixing them.
Yeah. Student loans, depending on if you do a variable or fixed, it can depend. But I just think that college is too expensive. That's really more my beef with college student debt than really the debt itself. I just think that it's ridiculously expensive, and we don't need we don't need that. And so. That's pretty much on that. The one thing that I will say is that just do the numbers. Like, if you're going to take on any debt, please run through the numbers like 15,000 times. Because you'll hear it.
And
like,
don't keep that money in your trading account.
Yeah,
like,
keep your, yeah.
Like, I feel like that's such a big mistake. Like, a lot of, like, I only paid off half my car, and I was going to pay the rest of it off to build credit, because I have good credit, just not enough credit history. But yeah, so I put 30 down, and I was just like, I'll just pay that. I think you have to do it over the course of like a year and a half. And the first thing I did was withdrew that from an account, or from one of the trading accounts, and put it in an account I knew I wouldn't touch, because I was like, this money for this, and I'm not going to fucking... I'm not going to blow it on an option. I'm not going to blow it on a bottle, or a trip or anything. I know I'm going to have this money, and this is for the car. So whenever I'm calculating how much money I have, I don't include that, because that's not my money.
The way. I'm saving for a
Porsche's
house
money.
right now. I'm saving for a house right now, and so I actually opened up a bank account with a bank that I
better
don't.
not be in fucking New Jersey or New York, dude.
No. The chances of that are probably pretty slim. However, this will be the first time that my mother's hearing this, so.
Oh god.
There's also that. But last thing, that's pretty much on that topic. Just do the numbers when you're calculating debt. Do the numbers, because if you're gonna buy a $50,000 car and you're gonna take on a 20%, interest rate or something, and you're gonna buy a $50,000 car, do the numbers. In interest alone, on that 50 grand, you will be paying 10 grand a year. Like, think about how hard you work for that 10 grand. And ask me, listen, you make $2 million a year, fine. But like the average person, myself and Dan included, $10,000 a year, we don't have to just fucking blow it away on interest. So please ask yourself, do the numbers and ask yourself, all right, does this make sense? Because I guarantee you that if you think about it, it might change your mind once in a while.
All right, guys. Well, don't take on any debt and be good. And I hope you all had a great weekend. And hopefully we see 430 on SPY. Unless you have puts, then we hope we see 390 on SPY. All right, everyone. Have a great week, and we will see you on Wednesday.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.